What is up, you guys? Welcome to trading session number 33. We're diving into, some big news for Mogul Fellows stock portfolio. We just got our donation of 10,000, and we are in transit for another 9,000. So we got 10,000 that we received today, and then another 9,000 that we are going to be receiving in the next week or two, depending on when the bank allows it in, the stock portfolio. So we are waiting for that. We're waiting for another 9,000 into the portfolio, and you see account value here. We have a total of 16k right now. We have cash balance 11,549, and then with another 9,000 coming in. So that is the portfolio. We want to dive into some news. Dow sliding another 200 points to reach session lows, and then we have treasury yields climbing still above that 4.0 range. So we could dive in. Nothing has really changed since the last trading session. We're seeing we were a little bit too overconfident, like I was saying yesterday, in the market. Retail investors were overconfident this beginning of the year. As we bounced back from the beginning, that dive down in the beginning of the year, we bounced back up, and now we're coming back down due to the overconfidence of the Federal Reserve cutting rates as soon as March. I do want to dive into some stuff. We have retail sales data for December came in stronger than expected, indicating a resilient consumer and putting aggressive rate cuts from Federal Reserve into doubt. Retail sales were up 0.6% from November and gained 0.4 month over month, excluding autos. Then we have economists polled by Dow Jones had estimated a 0.4% month-to-month increase in retail sales and 0.2% ex autos. So right here, like I was saying, 10-year treasury yield was trading nearly 6 basis points higher at the 4.121. That is higher than it was yesterday. We had the Federal Reserve Governor Christopher Waller warning that it's really too early to cut rates as soon as March, and they're thinking about really deciding to do it probably later on in the year. Hopefully in April or May is the first interest rate cut that the Federal Reserve gives us. That'll really, hopefully motivate people in the market to really feel comfortable with stocks. We also, right here, we still have 60%, chance. Traders are pricing in a roughly 60% chance that the Federal Reserve begins cutting rates in March as hopes mount for a pivot. And that is according to the CME Group Fed Watch tool. So that's pretty much the news. I'll leave this in the description below. We also have a lot more earnings coming out. I think the first one we have in the portfolio, I think, is Johnson & Johnson. That is Monday. So we have another, couple days until really, earnings starts kicking off for us. So let's dive into let's get the quote up here of QQQ, guys. So the news today for the Mogul Fellows stock portfolio is we are going to be building a position, quite a big position in QQQ that follows the NASDAQ 100 Invesco NASDAQ 100. So that is what we're going to be following from now on. I know we've been really following SPY, but QQQ really has higher returns than the S&P 500 just because it is heavy in technology. Technology typically tends to move quicker if it's doing good, and then quicker if it's doing bad. So a lot more volatility with QQQ, which we want, because if it's selling off, we want to be able to buy it at a cheaper price, and then if it's going up, it is giving us bigger gains than SPY. So the big news, we are going to be dividing our 19,000 into, I believe, 10 different buys. So we're going to be doing 9 $2,000 buys and then one $1,000 buy. and that's what we are going to be doing, I believe, in the next 10 trading days. So we want to really average in, dollar cost average in, and get a big position in Qs as we move forward with the stock portfolio. So let's go ahead and do the very first QQQ buy of the Mogul stock portfolio. Let's go ahead and do that. We are going to be doing a $2,000 buy right now. So we're going to go to shares, and I believe with the price right now, a $2,000 buy would be 5 shares. Let's go ahead and lock in a 5 shares. So we got quantity 5 shares, QQQ, and then that amount is 2,023.70. So let's go ahead and lock in that buy for today. All right, so we got QQQ 5 shares at 404.70. So that is our average price. We'll see the new position, and it is now the new highest in the portfolio over Palantir, and that is at the average price of 404. 5 quantity shares, market value 223.65 right there. So that is now the biggest position in the portfolio. We do have our Palantir now that we want to talk about. Our Palantir cover call position. We have, since the market's really coming down, we have now Palantir trading at 1621, guys, and we really want that to come up to around our average price by Monday, by I believe it's next Friday, January 26th, and that is what we want Palantir to get to, around 1770, in between there and 1795. The reason for that is because once this cover call expires and our shares don't get assigned, we will be ready to do a strike price that won't be so far out from the 1770 average price. Right now we have to do an 18 strike price, which is not really that good of premiums right now, compared to if it was trading at a higher price closer to our average price. Hopefully that makes sense, but we want it to be closer. We want it to be on our average price or higher to be able to get a closer to in the money cover call for a bigger premium, and we really want that to come back up, guys. So that is the update on Palantir. Expiration is January 26th, so we have another week and a couple days to wait for that to expire. Now for the $10 buy of the day, we are going to be looking at what is down. Pretty much every stock besides DraftKings and PayPal are down on the day. We have DraftKings up 3%, and then we have PayPal up 0.22. We bought PayPal yesterday. If we could see, it is kind of recovering back up to that 200-day moving average. So hopefully that makes a run up. So now we're going to be diving in. Let's check out the lowest in the portfolio here. We have blocked down 3.4%. That's we see the 50-day really coming below that 200-day moving average there. We have Tesla still down due to some factors. We have it really trading below that 200-day, and that might be another buy for us to do. We really want to build Tesla up to be a big position in the portfolio. Disney, no, we got Calibre, that's looking all right. Zoom is 50 days crossing that 200-day, below that 200-day moving average. Ford right around the 200-day. So what I'm doing right now is I'm scanning stocks. I'm scanning the RSI indicator, and I'm also scanning the 200-day moving average and where the 50-day is around the 200-day moving average to see where it is headed. So right now, I believe Airbnb is looking good right now. Trading below. That's 35 RSI though. Let's see, guys. I think we're gonna do. Let me double check what Tesla's at right now. So I just scanned every stock, and I believe I still like Tesla for today. It is really trading below that 200-day moving average, 50-day really showing no signs of a reversal, and trading in 25 RSI indicator in oversold values. And we want to keep buying it as it goes down. That's why we do $10 buys a day. As it keeps going down, we want to just attack that stock as it goes down. So that's pretty much what we do at oversold values, and then we trim in overbought values. So let's go ahead and lock in a $10 buy of Tesla. Let's do a order quantity is 0.04702 shares. Let's go ahead and lock that $10 buy in right now. All right, we got filled at 212.75. That is what we got filled at for Tesla, and that is pretty much what we. That's all I think we're going to cover, guys. I mean, we're not going to trim today. Obviously, the market's not doing too well for us to trim, so we just want to hold on to all our positions right now. We really have. Q's being the biggest one now, biggest position. We have Palantir, big position just because of the cover calls we have on it. And then we have Apple, Tesla, Nvidia, Meta, and Microsoft being pretty much the top 5 of the DCA fractional. And then our bottom is really, we got, Google, MGM, Cowboy Group, CRM, and then Airbnb. At the bottom, Google's only down there because we trimmed it. Same with Airbnb. We do want to build a lot more into these other stocks as well. But that is pretty much the trading session number 33. Yields are rising due to the federal chair governor coming out saying it's going to be really hard for us to cut rates as early as March. We're hoping to get, the Fed to come out, soon to try and give us an idea when they want to cut rates. And we're hoping by April or May is going to be the first one that'll really give motivation for retail investors to get back into the market. But right now we're seeing a sell-off. As we can see, let's go to QQQ again. We see a sell-off the last couple trading days, heading down towards that 200-day moving average, meeting that 50-day right there. So you can see on SPY, you can see a similar graph here, and you see it now trading below that 50-day, the S&P 500. So that is the pretty much how the market's reacting to the yield news going on right now. And then we also had some data come out with retail sales as well that is reacting. Stocks reacted to that as well. So that is trading session number 33. Hope you guys have a great rest of your week. If you guys are not a part of the Discord yet, go to mogulfellows.com, go to membership, and get into the Discord while it is free, guys. All the details of the portfolio is in there. If you want to join, I will be charging for it soon, so get in there while you can. All right, guys, hope you have a great rest of your day. Happy trading. Hit the outro.